All right, let's just get right into it. We saw a brutal end to the week as the market came face to face with its biggest nightmare, the threat of stagflation. This is the story of a massive risk-off Friday, but it's also a story of three incredible stocks that just completely ignored the panic. So, the S&P 500 dropped a hefty 1.33%. A move like that is significant. It wipes out recent gains and just screams that fear is taking over. It was a total sea of red, and this was the number that had everyone buzzing. And hey, it wasn't just one corner of the market. The sell-off was everywhere. The tech-heavy Nasdaq, it got hit the hardest, down over 1.5%. And the Dow wasn't safe either. This was, no doubt, a market-wide bloodbath. So what is this boogeyman called stagflation? Well, it's this exact toxic mix right here. You've got an economy that's slowing down, which means people are losing their jobs. But at the very same time, the price of everything is shooting up. It's truly the worst of both worlds, and for the Fed, it's incredibly tough to fight. And this is what set it all off. A really shocking jobs report showing the economy is actually losing jobs, while at the same time, conflict in the Middle East sent oil prices just soaring. You couldn't write a more perfect script for stagflation fears to completely grip Wall Street. But, even in all that chaos, there were these pockets of incredible strength. So let's talk about our first story. Right in the middle of all that big picture economic fear, one little biotech company got a massive lifeline, which just goes to show you that some things are totally immune to market panic. Just look at the difference here. On a day the market was getting absolutely hammered, One Biopharma didn't just tread water, it exploded. This is the power of a catalyst that's all about the company itself. A 65% gain in one day? That is a life-changing move for anyone holding that stock, and it happened on huge volume. So, you gotta ask, what on earth could possibly drive a move like that when everyone else is running for the hills? And here it is, the driver. A good old-fashioned buyout. M&A. Day one was bought out in an all-cash deal at a massive premium. What this tells you is that even with all the macro fears out there, big pharmaceutical companies have tons of cash, and they are more than willing to pay up for a promising drug pipeline. It's a huge reminder that company fundamentals can absolutely crush fear. All right, case study number 2. This one takes us right into the heart of the tech sector, where one of the most powerful trends on the entire planet really flexed its muscles today. And of course, I'm talking about artificial intelligence. And again, just look at this split. The Nasdaq, which is home to all the biggest names in tech, was down big. But Marvell Technology? It wasn't just up, it was up over 20%. It was this single shining light in a sector that was otherwise getting crushed. What an absolute rocket ship of a stock today. Seriously, a 20% jump on a major semiconductor company? That's staggering. It tells you there's a powerful story unfolding here, one that investors are betting on in a big, big way. So why the huge pop? Well, Marvell dropped a fantastic earnings report that just blew past what everyone was expecting. But what really matters here is that their results confirm that the spending on AI data centers isn't slowing down one bit. So while the rest of the market was panicking about a recession, Marvell proved the AI build-out is still running at full speed. Okay, our third and final story is about how some investors didn't just get through the chaos. They actually used it to their advantage. This is the classic safe haven trade. Now I know what you're thinking. A 1% gain doesn't look as crazy as the others, but here, context is everything. While the rest of the market was clearly pointing down, Diamondback Energy was just grinding higher. That's what we call relative strength. It was literally moving against the tide. In fact, the energy sector was pretty much the only part of the market that was catching a bid today. That little green number, as small as it might look, was a huge outlier, and it tells a very specific story about what portfolio managers are most scared of right now. And here's the play. With oil spiking past $90 a barrel, the fear of an inflation shock driven by energy prices is very, very real. So what's the logical move? You buy domestic energy producers like Diamondback. It's a direct hedge. Think of it like an insurance policy against the very thing the rest of the market is freaking out about. So, what's the bottom line here? Let's boil all this down into a few sharp takeaways you can have in your back pocket when you're talking about the markets. It was brutal out there today, but look at Day One Biopharma jumping 65%.
It just goes to show that no matter what the macroeconomy is doing, if a biotech has a pipeline that Big Pharma wants, they will pay a massive cash premium to get it. M&A in the healthcare space is definitely not dead, and it's a great place to hide from the tech volatility.
Marvell surging 20% while the Nasdaq dropped 1.5% is the ultimate signal for our tech positioning. The market might be terrified of a recession, but big tech companies are absolutely not slowing down their AI data center spending. It really proves that the networking and infrastructure layer is still the safest house in the tech neighborhood right now.
The relative strength we saw in Diamondback Energy today is a classic stagflation hedge. With U.S. payrolls actually shrinking and crude oil crossing $90 a barrel, buying domestic energy producers is the only way portfolio managers can shield themselves from an energy-driven inflation shock. If the Middle East conflict drags on, that energy sleeve is going to be the most important part of the portfolio.
So that leaves us with this one big question. Marvell surged 20% today, completely ignoring the brutal market sell-off. Do you think AI infrastructure stocks are officially immune to a slowing economy, or will the macro panic eventually drag them down too?
Let us know what you think. Drop a comment below and make sure you subscribe to Market Fluency for your daily edge.